Welcome to the Biotech Startups podcast by Exceeder. Join us as we speak with first-time founders, serial entrepreneurs, and experienced investors about the challenges and triumphs of running a biotech startup, from pre-seed to IPO, with your host, John Chi.
My guest today is Nathan Clark, founder and CEO of Ganymede. Ganymede is the modern cloud data platform for the life sciences and manufacturing. Their lab as code technology allows you to quickly integrate and harmonize lab instruments and app data, automate analysis, visualize all your data in dashboards built over a powerful data lake, and ultimately speed up your operations to accelerate science or production. Prior to founding Ganymede, Nathan was product manager for several of Benchling's data products, including the Insights BI tool and machine learning team. Before Benchling, Nathan worked at Affirm as a senior product manager and was also a trader at Goldman Sachs. Nathan's extensive background in machine learning and data systems across financial and lab technology and knowledge of their applications in the life sciences offers unique insights for founders to benefit from. Over the next 4 episodes, we cover a wide range of topics, from Nathan's adolescence and his fast-paced experiences in cutting-edge roles at Goldman Sachs, Affirm, and Benchling, to the importance of data integration and automation in the life sciences and Nathan's insights from founding Ganymede. Today, we'll chat about Nathan's early years, the influence his entrepreneurial father had on his career decisions later in life, and his time studying business and finance at UNC. We'll also discuss the role he eventually landed at Goldman Sachs, where he learned about the intricacies of bond trading, including the importance of liquidity, risk management, and attention to detail in the fast-paced trading environment. Nathan also highlights some transferable skills and lessons that can benefit entrepreneurs in any industry. Without further ado, let's dive into this episode of the Biotech Startups podcast. Nathan, so good to see you again. Thanks for coming on the podcast.
Yeah, thank you for having me.
So in classic, the Biotech Startups podcast fashion, we always like to go as far back as possible. The reason being that we think that your early kind of formative years impacts and influences how your business philosophy and your leadership style today. So I thought it would be fun to turn the hands of time back. Can you tell us a little bit about your upbringing and how it's influenced you? What got you into business, your leadership style? Just give us some color there.
Yeah, it's definitely a throwback, but going all the way back, I think a lot of it for me comes from in my childhood seeing my dad as a role model for how to conduct business. He was always very entrepreneurial and did a lot of different entrepreneurial things, spun up companies of all sorts, including spending a lot of time as a contractor for home building, and then going into more of a white collar direction. But through that, I think he is an amazingly proficient person at everything he does. And I think also just has the sense of there's no secret to a lot of business and there's no secret to a lot of things like home building. When you build a house, from the outside, it sounds like an intimidating concept, but the reality is you just go do it. You go read up on what you need to do and you go start and you start digging and you start pouring concrete. And there's a lot of technique that you can learn over time, but there's no secret to anything. Most progress that we have to do, even in science, I now find, there's no secret. You just go dig in and then you discover the answer and then it's execution. The problem in a lot of things is not any secret insight. It's really execution. And I think that bears through all the way to technology. So I think that was really formative for me in being interested in business and also gaining that perspective that to push forward and either do something entrepreneurial or in any job that you're in, there's no secret. You just push and execute and help avoid some of that imposter syndrome. Since there's no real secret insight, there's no reason to have imposter syndrome. It's more like there are just people who do things and there are people who do not do things. And you want to be the person who does. And then as long as you're working hard, you'll end up succeeding.
That is incredibly refreshing to hear. Because I think, and don't get me wrong, exactly what you said, there's process improvements and techniques that you can learn, right? We have tools, maybe we use the tools, but there's no silver bullet. I totally agree with you to building a company, running research. It's oftentimes just not glamorous. It's almost like running through walls on the daily. And it's kind of just seeing, having these conversations and learning from my parents as well. Is just it's the unglamorous stuff, that execution, that kind of you don't see it because oftentimes it's behind closed doors, and then you see the final product. I'm sure you see your dad construct something beautiful, and you're like, oh, that it must have been easy, right? And it's like, no, like this was like a lot of blood, sweat, and tears to get this done. And it's really, I think, as and one of the kind of overarching reasons why we started this podcast was to kind of unpack that, because I think it kind of with the proliferation of podcasts, and everyone wants to figure out like what is the secret sauce to it all. But
Yeah.
it's like it's something like this where it's like there is no secret. It really is just doing.
100%. Well, and I think that bears through all the way to what I'm doing now. There's no secret to Ganymede. There's nothing but just doing a lot of research, getting a lot of insight, and then doing a lot of work building out the product and the platform. And I think that's one of the things that motivated me to make the leap into biotech from finance originally. And I'm sure we can go deeper into that. But in that process, that was really kind of me putting it to the metal of really saying like, okay, I can't just go learn molecular biology. I can't just go, build out this app that I built a little a plasmid viewer app to cart around to companies that I was interviewing with to say, look, like I can do the technology, I understand molecular biology. And yeah, maybe I have no business doing it, but no one does, you just do it.
Yeah, and also it's like there's this thing is like everyone's like that's the longer you do it too, you kind of just realize everyone's just figuring it out. Like everyone, as much as like there are people who are very experienced, but they're like in their daily execution, they're still figuring it out. Which is kind of like this thing. I take a great. I sleep easy at night. I sleep better at night. There are definitely things that I'm like, oh, that's stressing me out, but I sleep better at night knowing that even very successful people are still just figuring it out. And it was funny when you're talking about like learning molecular biology. It reminds me of The Matrix, for everyone who, obviously the very famous movie. But when Tank was like, when Keanu Reeves is like, teach me kung fu, and then just like plugged in, it's like, I now know kung fu. Like, it's like quite the opposite of that. It is not like Tank downloading just like information to the piping back in. But I digress. So you sound like your father had a lot of influence in kind of this entrepreneurial kind of like, ventures on top of just like showing you that like there's nothing that replaces the sweat equity and the elbow grease. Did you always know that, like, was your father what kind of like spurred that entrepreneurial spark in you? Or was that something that you kind of discovered, or coalesced in your career later?
I think it was a combination of things, because I did end up going into a pretty standard career path after college. But I think in the back of my mind, I was always interested already in doing something like a startup. But I do think it's quite valuable to also make a pretty big push on the career side and grow there to build up the momentum required to do that. And I'm not the kind of person, some people I think just have that feeling of, oh, I need to do a startup. I need to forge my own path. And that's actually not me, I would say, quite as much. I think for me, the reason that I converged on doing something like this is because it's so hard to replicate the amount of leverage and the amount of impact that you can have by doing your own startup. It's definitely a very risk-on kind of move to do a startup.
That's an understatement.
But that was also another thing. Yeah. Understatement of the year, perhaps. But that was exactly what I wanted to do. I kind of wanted to say, all right, I'm almost acknowledging like I'm throwing away my career in doing this. I'm it's definitely not an expected value positive thing to do versus having a career. But I love it. And I think it's been a great direction. The feeling of there's a lot of ups and downs, but having that ability to control your destiny within reason, it is very satisfying. When things work, let's say.
Yeah, absolutely. And like, that's exactly it. There's like the highs are high and the lows are really low. But it's kind of like, there's like this equilibrium to it where you're just like on net, like this feels decent. Like, like we feel like we're tracking directionally in the right area. And I guess like another question, just like on that, did you know that you would end up in the life sciences, or was that another kind of spark of interest for you?
It's an interesting question, because when I think about it, it's always been at the periphery of what I've been doing, even before I started my career. When I was, I've always loved futurism and things like that, and biology is a big part of that. So even going back in 2012, I volunteered for a bit with this group called OpenWorm, which was doing a fully in silico model of a C. elegans flatworm. C. elegans is whatever, I think like 50 or 100 cells. So it's about as small as you can get, and have an animal model that's very easy to model, but still actually show some animal behavior. So they were creating a physics-based simulation of it. And I spent a little bit of time trying to help them on the business side. So I've always had that interest, and I've always kind of geared towards looking at that. Even when I was at the buy now, pay later company Affirm, which was a super formative place for me, we had these open-ended lightning talks that we'd sometimes do. And I did one on molecular biology,
Cool.
transposons and retrotransposons
Very
for
cool.
things like how HIV operates. So it's always been at the periphery. And then I think after Affirm, I was just like pushed over the line, and it's like, all right, let's make this my career. I feel like it's calling me, as much as I love finance. I love finance as an academic thing and in practice too. But biology is just, it's always been kind of eating away at me.
Yep. Very cool. Very cool. Yeah. It's like I'm always very curious on where that original spark was, and when that occurs. And everyone's story is always a little bit different in kind of for me, it was like AP biology. A little bit more of a traditional kind of thing, but it was a teacher that just got me fired up about it. And I don't think I had that spark until then. But that being said, there are folks who even find that spark way, way later in their career, and still have remarkable, outcomes in the sciences. So I don't think it's ever too late. But it's always fascinating to hear those stories. And so, now you're kind of entering, you're starting to evaluate universities. Did you, and tell us a little about your university selection, what you chose to study, and kind of your time in your undergraduate.
Yeah, well, the selection process. So I had a very unusual high school process, actually, which informs this, because I was, for a little bit in middle school, my parents tried homeschooling me, and that didn't really work out. And I was also pretty far ahead of the curve on a lot of subjects. So what we ended up doing for basically my whole high school time was just taking college classes at a bunch of different colleges, kind of like the dual enrollment model, except nothing but dual enrollment. And so all of my, I have like 6 different colleges worth of transcripts.
Yeah.
So when I applied to colleges, it was a pretty weird package that they got.
Yeah, I'm sure.
Suffice to say, and it worked out with some colleges. I got some good acceptances, but UNC, I think, was a pretty good one, because I got a little bit of a scholarship there for some study abroad stuff. I got into their honors program, and they have a really good business school, which I was definitely interested in. And it was also just a beautiful campus, felt like really strong people there. So in the end, that was where it just made sense to make the jump. So I don't think it was considered, honestly, that deeply. And it was really focused from the business side, because I think that was where, around that time when I was whatever, 17, 18, the idea in my head was probably some sort of business finance direction to go in, which was sort of the starting point for me. But UNC was a great choice, and I loved it there. It was an awesome place to have an undergrad.
And was UNC close to home for you, or were you going out of state?
Pretty far from home, actually. Yeah, I grew up in Western Massachusetts. And so it was a long haul down there. But it was great. And I still go up to Massachusetts every winter, every summer.
Absolutely.
Nice to get out of North Carolina for the summers.
Yeah. That's, you got to be strategic about it. I always love hearing those stories too, because for me, I had the opposite kind of I'm from the Bay Area, born in Berkeley, and now I'm in San Francisco. Quite frankly, haven't left a 7-mile radius my whole life. And so I'm always curious. I'm what is it on the outside, outside of the Bay Area? So trying to do a lot more travel, and really embracing, the opportunities to travel for work, as kind of a cheat code. Is I can, I can 2 birds, 1 stone. I can go see a new place and learn about the kind of the cultural, business culture, just and get a vibe of the scenery. And so you're at UNC now, far away from home, and you're focusing on business. Were there any kind of pivotal or pivotal classes, professors, or mentors that left a lasting impression on you, or perhaps took you under their wing?
I think in class terms, I love my economics classes. I loved my finance classes, and I always, in that, I spent a bunch of time also I thought about getting a math major for a little bit, and I thought about originally doing a biomedical engineering major too, which is another sign of that biology interest kind of bleeding through. But In the end, I just gravitated towards the finance side, especially because I found that really satisfying to be both the business side, but also a very quantitative one in
Yep.
a place to really exercise myself on that. Um, and so I think that's what really drove that interest, was finding that combination of something more analytical and quantitative in the business side. And when I was recruiting for jobs, at first I thought, I'm going to go into investment banking, and was recruiting for that. But then I got the offer from Goldman for trading, and in retrospect, it makes so much sense. I feel like they pinged me probably the moment they saw me, of like, okay, you love finance and you love business, but also you're a little bit nerdy and want to be really quantitative. So perfect,
Yeah.
come on in.
Yeah.
So yeah.
That's amazing. And also, like, I think it's such a blessing to, kind of find that kind of like the resonance of like a subject matter and like what works personally for you. Because I think sometimes a lot of the time you're like trying to grapple and try to figure out, and you're kind of like feeling around in the dark of like, what's this fit of like discipline and my style of learning and style of like critical thinking. And so you're mentioning you got recruited to be a trader. For those, the podcast audience is broad, but primarily scientific, like life science. For those who are, not familiar with trading as a discipline, particularly at Goldman Sachs, can you talk about what is trading?
Yeah, I'm happy to, and you'll have to cut me off on this because it's rare for me these days to get a chance to do this.
Yeah.
But fundamentally, so the business of trading, especially post-crisis, is market making. You're in the market to go to bring liquidity to things and make it so that people can buy things, and make it so people can sell things. If you imagine a bond, for instance, bonds can be pretty hard to model, especially when you get into weird illiquid stuff. The kind of stuff I was trading, I ended up joining a CLO desk, collateralized loan obligation. It's kind of the one collateralized something that survived the crisis, and actually is a pretty great product overall. But there's a little bit outside of that market. People hear that and they, they wince. But
It's like they tense up a little bit. Yeah.
Exactly. But when you have stuff like that, it's so important to have someone, if you are investing in those and you need to be able to buy them or sell them, unless you know a bunch of people and know how you want to evaluate the risk of it, it's pretty hard to just go buy and sell them from nothing. So the role of trading ultimately is to be able to be a central place in the market where people can go to and they can buy the thing from you, or they can sell the thing to you. And what you're trying to do is not invest necessarily. That is something that was mostly shut down. There were investing desks that were more like hedge fund style pre-crisis, but your role post-crisis as a market maker is to say, I'm trying to balance my books. I'm letting people sell things to me at a fair price, and then I'm selling things to people at a fair price. And I'm really just trying to facilitate sales. In the process, you're not necessarily matching up people one-to-one. You do take some of that investment yourself. You have an inventory. So you're still having to manage a lot of risk and balance your books in that. And so you need to get paid for that risk. So when you buy things from people or sell things to people, you do make some margin, you make some spread to get paid for the risk you're taking. And then a lot of it comes down to how well can you manage that risk and balance your buyers and sellers, hedge things. If you're in a market that can hedge, you can't really hedge collateralized loan obligations. So it's much more of a balancing act. Yeah, so that's a lot of what the trading desk does. And what you do as a trader is trying to understand the risks of things in the market, because you can buy things, you can sell things, you can evaluate it for a fair price. And when things move normally, it's pretty easy. Everything is an exercise in understanding what happens when things move in unexpected ways, or just when things move in regular ways, how much will they move, so that you can manage that. So you think a lot in terms of how to turn scenarios that might happen into quantitative things, how to evaluate risk scenarios and try to turn eventualities and possibilities into numbers that determine, okay, what's the actual sale price or fair price for things. And one other thing that's really nice that I found really interesting as an ethos was the trading desk, because you're not just investing and you're trying to do the right thing for your market. You want to get paid, you want to make your margin, but you are trying to do the right thing by your clients and buy things at a fair price and sell things at a fair price. The trading desk, if you name any bond, they'll quote you both a buy price and a sale price. It's the bid and the ask. And that's nice in a way, because it prevents the trading desk and clients, if they do this too, from having a price that's completely out of whack. Because if you say, I go to the trading desk and I want to sell something for $90, and then the trading desk says, oh, well, I'll only buy it for $50. I'm going to rip your face off on the price here. The trading desk also is obligated to give a sale price in that too. And if they're only willing to buy it for $50, well, they're going to sell it for $60 or something, right? Because you can't have, that's a huge spread already, $10 difference. So you might say, well, I was going to sell this for $90, but I happily buy it for $60. So that actually is an enforcement mechanism. You have to kind of all be within reason, because anyone could trade against you in any way as long as you're playing things fair. So lots of interesting stuff. I'll kind of digress on that, but you're just trying to understand risk and quantify things.
Like, that's super fascinating. I've never been on a trading floor, so like hearing this from someone who's been there is like really fascinating. Because I in the life sciences, bonds are far more rare. Like, it's a lot of just like equity issuances. Like, credit is like a kind of a weird child in the life science space. And so it sounds like during this time, and trading more broadly, it seems to me that it's kind of like bringing efficiency to something that's like incredibly inefficient and just like not that well connected, or just liquid. Would that be a kind of a, if I'm really just like taking it like 10,000 feet up away to think about trading?
Exactly. And I mean, I think people get made fun of for saying this sometimes, but the value of liquidity is pretty high. If you want to invest in something, you're going to be concerned around whether you can sell it at all, or sell it for a fair price, or sell it quickly. And so if you're buying something a little more exotic, like a collateralized loan obligation, or even any bond, general corporate credit bonds are also subject to this. Everything is. It's going to actually help the value quite a lot if you can then turn around and sell it when you want, and not just have to hold the thing forever, or go find a buyer and spend tens, hundreds of thousands of dollars on transaction fees and lawyers and all this stuff. Standardization and efficiency, and being able to know, I could call up Goldman or anyone out there who's market making for this thing, and sell them. I might not like the price, but they'll give me a price. That's such a huge premium. So it was very important for the origination side of these bonds, the investment bankers that actually created the bonds and worked with the issuers to create them, to then have a trading desk that would then support them and provide liquidity after, because it provides quite a substantial actually amount of value into that deal. So that's one of the reasons that the investment banking side and trading side need to work hand in hand.
That's really fascinating, because like, so for like Exceeder, we primarily live in like the early stage venture space, and that's like the definition of a illiquid asset, especially like, if you're a biotech, like, seed stage company, you might not see liquidity for a very long time. And we're now in this interesting period, right, where it's like, it's not just the early stage venture folks who are finding out that like there's like serious illiquidity here. It's with the IPO markets now being kind of like frozen, but it's like private equity too, right? They're like, what do we do? Like, we were supposed to like, the horizon is like, we're here now, like the time horizon has arrived, but like it's not liquid. So it poses a really, I don't pretend to have the solution, but it's like what you're describing, like, of the value and importance of liquidity, it's very relevant right now. And it's not just the early stage ventures, it's the, it's like the big kind of later stage, more mature companies that are big corporates and private equity as well. But obviously we're like starting to see a lot of like interesting like continuation vehicles to kind of like figure out a way to kind of give some sort of like semblance of liquidity. But it's interesting to hear that's like at the institutional level, and bonds being a great example. And I guess now I'm really starting to nerd out. Why are bonds more illiquid than stuff like equity? Maybe I'm wrong. I don't know, but I'm assuming bonds for some reason are just more.
Yeah, that's mostly right. I mean, there's certainly, there's types of equity, even publicly traded stocks that are going to be less liquid than certain types of really liquid bonds. But I'm like, treasury bills are, all the treasury products are technically types of bonds, and those are the most liquid of traditional financial instruments. But most of the time bonds are issued in a little bit more of a bespoke format, and the existence of stock exchanges and the way that stocks are regulated and structured creates a lot of transparency and structure and efficiency around stocks specifically. So when you say that, if you think about something like Apple stock or something like that, Apple bonds are probably pretty liquid on versus other bonds, but the fact that it's stock and it comes in that standardized structure And the fact that you have all this retail interest and you have people, there's huge mutual funds that want to invest in it. All of that helps create a much more liquid market. Whereas bonds, there's been a lot of standardization that's come in over time, but there's still a little more goofy and a little more non-standard. And it's both, you have the risk in bonds. I guess the other issue with bonds, equity, everyone kind of gets what equity is about. Equity is about you're investing in that long-term health of the company, and the growth of the revenue and making money off that. Bonds, because they are something where they either pay out or they don't, the evaluation of the risk, back to what trading is, trying to figure out what is the risk that they don't pay and why does that happen and how does that impact the price, is a much more fine-grained thing, because you're thinking much more in edge case scenarios. There's also a lot of different types of risk, like some things like Apple bonds. If I don't even know if Apple issues bonds, but there's plenty of big blue chip companies that do. What are you actually trading on? Like, how would you establish the price of the bond? The answer is, with really AAA corporate credit kind of stuff, it's mostly not actual risk of the bond defaulting. It's mostly around interest rates, and it's mostly around where you're expecting the yield curve to go, and like risk premiums between general corporate stuff versus treasury bills. And so it's this much more like second, third order consideration for the valuations. So I think that also just completely, like, you can be pretty liquid in that market, but for traditional retail investors, they're not going to be generally capable of really understanding why things are priced the way they are, or get into that and actually trade it effectively. And so there's just less interest. And so it means that there's fewer market participants too.
Interesting. I'm learning a lot here. A buddy of mine is trades in basically liquid credit. But he talks about when you get into like the weird esoteric kind of like spaces, it becomes like super bespoke, just like you're like playing 4D chess. I'm like, oh my God, like what's going on here? For me, I was like, I'm going to put in the S&P 500 and, I don't have to do like quantum physics to figure this out.
Yeah.
But
And now
very
it's more
interesting.
liquid.
Yeah, exactly. So, okay. And just like real quick to like zoom out a moment. So you're at UNC. Did you move to New York to work at Goldman?
Yep. Yeah, I was working out of their headquarters. So I ended up living in Manhattan for like 7 years after that.
Very cool. How was that experience? So you're now in New York, you're at Goldman, you're kind of like in the heart of it. How was that experience? What was like, working at Goldman, like, outside, like just broadly speaking? I know I have colleagues who work I don't know anyone who specifically worked in the trading department, but you talk a little bit about like what was trading like at Goldman specifically?
It was an amazing experience. It was also a ton of work.
Yeah.
And luckily though, at least, in our market, in the trading side, you kind of do have a little more closed formness to your hours, because on the investment banking side, these deals can kind of happen anytime and you end up working like every weekend. For us, it was really, really focused, concentrated bursts of work between, 8 a.m. and 6 or 7 p.m. During the weekdays, and then sometimes a little bit of weekend work. But it mostly balanced out. You still have some late nights. But I think what drew me to Goldman, and what I think was true when I got there, was just the level of, this sounds kind of like a platitude, but the level of excellence and the level of fortitude and attention to detail that they have a reputation for, and that everyone I saw there exhibited. When you hear they have a very strong reputation, but I think that bears through, and they have a culture of having very high expectations and pushing really hard, but then you get more responsibility really quickly. And so I think what I found there was that it is back to that, just pushing and executing, and being diligent. And that's what mattered. Everyone there is smart. Smart is more of a check the box thing. Like, I expect every single person I see on that trading floor could do calculus. It's not a thing. It's more how hard, how well do you pay attention to detail? How well do you execute? How can you remain creative while still getting the work done, and, answering the phone, and having things blow up on an hourly basis.
Yeah.
So I think that was really the exercise there, but the fact that they managed it because you have people that have really high horsepower there. And so I think that's really what I took away from that is, it's just one of those things where relentless attention to detail and execution will get you wherever you need to be ultimately.
Yeah. And I mean, that's like cross applicable, like across all industries, like, right. It's kind of like, it's a transferable skill. to have that attention to detail and kind of just like really holding yourself to a really high bar.
Mhm.
And Goldman is definitely known for that. When you joined Goldman, was it kind of, and again, I'm asking from this position because I've never worked at Goldman, but is it a thing where they're like, figure out bond trading? Or was there someone who's like, here's the bond guru and let me show you the ropes and then we'll cut you loose? Like what was that like? I'm not looking for a specific answer. More, I'm just like
Hmm.
curious.
I think it's a mixture of the two, but that's, I guess, coming back to the notion of it being really execution heavy. The trading desk is like a big machine, and you're kind of oiling it and pulling the levers in a lot of ways. Goldman talked about it as the client franchise. The trading desk has relationships with all the different clients in the market, all these hedge funds and mutual funds and things like that buy and sell these bonds or whatever it is. And uh, you're making the flow. You're making bonds flow at the end of the day between them. So I think when it comes to learning about the process, a lot of it is actually learning just about the actual mechanics of what's going on. Like, what does it actually mean to sell a bond? How do people actually exchange money and things like that? How do you do P&L, the profit and loss statement every day? That was something we were extremely rigorous about because you have to, you better have control and
Yeah.
understanding of your numbers.
Yeah.
And there's a lot of the numbers that are flying around. So it's a lot of reconciliation and careful diligence. And I think learning that is really important as a way to understand when you then start getting to the higher level and you start reasoning about bonds in the abstract and saying, okay, I think this has risk because of XYZ, you understand exactly what that means because especially in our space, you'd have stuff like, oh, this, the interest payment that's going to come on this actually is delayed because there's some provision in the contract over here. And then that means we actually will receive it on this date. So this is actually not worth as much as it looks like. And you see XYZ in your Bloomberg terminal, but Bloomberg's wrong because it doesn't have the right data because it doesn't know that the custodian of the bond has elected to defer the interest payment. All these things, they're very interrelated. And so I think that's a lot of what I learned through osmosis from other analysts and junior folks on the desk. And then eventually once you understand that and you can kind of intuit like, what is this? What's really going on? How did these things really flow? What are the mechanics? Then that helps provide that grounding for reasoning about it. Because ultimately, when you say, okay, I think this bond should be priced at 96 cents on the dollar instead of 95, when it comes down to why, you really have to understand every aspect of that. And it's truly a blend of the mechanics and the risk profile and the actual like business reasons why it's different. So I think then there's a lot of gurus. The senior people on the desk are definitely all gurus in that sense, and they have an amazing intuition. And it's a lot of kind of interpreting why did they make a certain decision and kind of seeing that and observing that as you start to get comfortable as a very junior trader, seeing how they reason and then starting to be able to replicate that and apply that to your own, small segment of the book.
Very cool. And it almost sounds like it reminds me of like kind of like learning a second language. You kind of like you got to understand like conjugations, like you got to understand tenses, like the very basic fundamental blocks of like the language. And then you start getting like you get the basics down to the foundational elements. And then you can start intuitively like having conversations and like feel your way around. Obviously, you're probably stumbling the first couple trades or you're like, oops, didn't get that one right. I can't imagine it was like you stick a landing every single time or in the very beginning. But as you start to kind of like get more comfortable with it, you're like, okay. And I guess maybe this is a question: how quickly are these trades going? Are these like super quick, or do you have time to like ruminate on it?
At the end of the day, the frequency of decision making for almost every trading desk, in an interesting way, it kind of comes back to the same, 10, 20, 30-minute cycle. I'll talk about that a little bit. But the reality is, if you're going to be operating, you need time to think. You need time to be able to be strategic. Sometimes things do start moving really quickly, and then you pick up the phone, and then as a trader, you just say, okay, I'm now less liquid. Things are getting weird. I widen my markets to handle the fact that I don't even have time to think. But generally, you try to keep things in a disciplined way. And so for our desk, we were trading pretty illiquid things. You'd have maybe a dozen trades, plus or minus, here and there on the day. Other desks, if you have something like the treasury desk, they're actually probably trading, or let's not say the treasury, but like corporate credit, or investment grade corporate credit. They're probably trading hundreds, thousands of things a day. And some desks are fully automated. A lot of the equities trading desks are actually all programmatic in terms of what they're doing. So they're executing algorithms and trading thousands of things per minute. But at the end of the day, you're still like operating in some cycle where you can say, I can make decisions through whatever means I have. Like for our desk, it would be saying, okay, I'm making decisions where it is actually like for a bond, we'll go through and look at it and think about it very deeply. For the corporate credit desk, it's probably saying, okay, I have these categories of bonds and category like baskets of different risk that I can look at. So I have a kind of aggregation upwards that I'm using, and then I'm deciding on that. So I'm kind of like dialing things in more at a categorical level. And then for those algorithmic desks, it's kind of the same thing. Like you're really dialing the algorithm around so that you can make sure that it's adjusted properly. Or you'd also have, then you truly just have also software developers on the desk that are developing the algorithms on a longer term basis. But I think that's that notion of trying to have you need time to think. So everything has to kind of ultimately pull back to that. And then you can try to make things automated or categorical within that. That's a big one. And then kind of similarly, the way that the desks are actually segmented was based on risk type. Like when these bonds trade and they have a certain price, why is that the price? For us, we were part of credit because the risk in a collateralized loan obligation, these are all loans mostly to private companies. So they actually were those loans, you pull them up, but ultimately their risk profile is still very much based on actually this loan might default. That's why the prices are what they are. So the risk you're trading and the risk you're taking is default risk credit. But in something like investment grade credit, that's more of a rates thing. So that might be bundled into rates. And then certainly like treasury bills, that's actually part of the rates desk, because with treasury bills, you're not really there. You can't think about the default risk of the US government. It's all just what are the future passive interest rates versus how this bond works. So that all falls under rates. So that's kind of the unit of the cycle is like, what risk are you taking? And then how do you evaluate that and apply that to the decision window you have, which is going to have to be at least on the order of 5 or 10 minutes. You can't faster than that and kind of be serious about providing insight or adding value.
Yeah. You're just like, let me get back to you tomorrow. They're like, no, need it done now. Like need it done now.
Yeah.
That's super fascinating because, and I can imagine all this, like, it's kind of like, being a founder of a company, it's like capital allocation, understanding risk, like, long tail risk, and obviously running a tight ship, right? Like you're talking about like reconciling the P&L, like, and making sure that it's airtight. I can imagine these are lessons that, albeit it feels like a very different, experience working at the trading desk at Goldman, that any founder can benefit from, like thinking about it and conceptualizing it. Because I think, when it comes to entrepreneurship, I think there's so many lessons that you can learn from other industries, other disciplines that are very much applicable. Kind of like what you mentioned at the top of our conversation, your father's kind of instilling in you. There's no secret sauce here. It's like, you got to just execute every day and get it done. Again, very, very applicable, irrespective of your industry.
That's all for this episode of the Biotech Startups podcast. We hope you enjoyed our discussion with Nathan Clark. If you enjoyed this episode, please subscribe, leave us a review, and share it with your friends. Thanks for listening, and we look forward to having you join us again for part 2 of our conversation with Nathan. The Biotech Startups podcast is produced by Exceeder. Don't want to miss an episode? Search for the Biotech Startups podcast wherever you get your podcasts and click subscribe. Exceeder provides research labs with equipment leases on founder-friendly terms to support paths to exceptional outcomes. To learn more, visit our website www.exceeder.com. On behalf of the team here at Exceeder, thanks for listening. The Biotech Startups podcast provides general insights into the life science sector through the experiences of its guests. The use of information on this podcast or materials linked from the podcast is at the user's own risk. The views expressed by the participants are their own and are not the views of Exceeder or sponsors. No reference to any product, service, or company in the podcast is an endorsement by Exceeder or its guests.